I'll get into a conversation with Keki Mistry joining us this morning on the show. HDFC eyeing that 14,000 crore fundraise. So let's get into that with him. Mr. Mistry, thanks so much for joining us. Now, looking at the quantum of the fundraise that is being considered, how much from this would be through equity? If you could share some more details with us, and how do you intend to use the proceeds?
My sense is that over the next 1.5 years or so, maybe 1 to 1.5, 1 to 2 years, a number of opportunities will come up in terms of making investments, looking at good acquisitions, M&A transactions, and things like that. Not just in the mortgage business, but also in our subsidiaries, be it life insurance, be it general insurance, be it whatever. Now, if such an opportunity does come up, then we do not want to, at that point of time, start looking at whether we have adequate capital or we don't have adequate capital. And that is the idea of taking an in-principle approval from the shareholders to look at a capital issuance of up to a maximum of 14,000 crores. Our objective at this moment is to get the approval. The process of taking approval will take about 5 to 6 or 5 weeks roughly. Once we have the approval, we will then be ready. We will work out what we need to do. We will then be ready with some plan on whether we should do equity or we should do some instrument which converts into equity at a future date. Today, the plan is that out of the 14,000 crores, some bit of it will be pure equity and some bit of it will be an instrument which will get converted into equity at a future date. Could be 2 years later, could be 3 years later, something of that sort. So that is the objective. The opportunities, to my mind, will crop up not just in the mortgage business, as I said earlier, but also in our subsidiaries. Now, what you must also remember is that every rupee that we invest into our subsidiaries gets reduced from our tier 1 capital, and therefore the need for capital at that point of time. It impacts our capital ratios because when we invest, let's say we were to invest 5,000 crores into a subsidiary, that 5,000 crores gets straight deducted from our net worth, from our capital, for the purposes of calculating a capital ratio. So that is the only reason why we are looking at a capital. We will time the market. We are not in a hurry at the moment. Whenever we believe the opportunity is right, whenever we believe that this is a good time to go to the market, that is the time when we will reach out to the market. Our capital adequacy on 31st of March 2020 was tier 1 capital was 16.6% and total capital was 17.7%.
Right, sure. Keki, analysts are also expecting credit costs to rise sharply for the entire sector per se. Given this backdrop that one is operating in, what are the challenges that you're currently facing?
Now, you have to distinguish between a housing loan and a loan taken for any other product. So a housing loan is a lot more secure, in my view, than a car loan or a consumer loan or a personal loan or something like that. The reason being that the funding has been done for a property. The property always has a value. The average loan-to-value ratio at origination for a housing loan is about 68 or 67, 68%, in that ballpark. And every month after the loan is taken, the individual is repaying the loan. So there is a principal repayment that keeps happening on a continuous basis. And because of that principal repayment, the outstanding amount of the loan keeps declining. So as the outstanding amount of the loan keeps declining, for a moment, if you assume property prices were stable, the loan-to-value ratio will keep diminishing, which means that the equity that the individual has in the property will keep rising. So this is not the first time when we've seen, this is obviously a much greater crisis than we've had in the past, but we had 2008-9, which was also economic crisis, to some extent 2002, 92, 98, and various points of time in our history. And we've seen that in the short term, you might see non-performing loans sort of inch up, but once normalcy comes back, non-performing loans come back to the levels which they were prior to the economic problems that the economy faced. And I have no doubt in my mind that something similar will happen in the current year also. Whether NPLs will rise this quarter, next quarter, I don't know. I hope not. I don't think in retail NPLs should rise too much, but we obviously watch this very, very carefully. But having said that, even if theoretically NPLs were to go up for the...
Mr. Mistry, good morning. Now, on the disbursements front, are you seeing a pickup in demand? Are there gradually signs of normalcy returning?
Very honestly, my sense is the recovery seems to be on track. It is a lot faster than what I would have expected it to be. Let's say if we had spoken in the middle of May. The whole of April, everything was shut down, all offices were shut down, and there was very little of business that we could do. We could do some amount of disbursements, but that was in respect of loans that were taken earlier. Post the middle of May, offices have started opening. Most of our offices are open today and are operating within the guidelines provided by the respective government in that location. In some places, it's 1/3 of the staff working. In Mumbai, for example, it's 10% of the staff working. So most offices are open. Some are still not open, but majority are now open. What we saw from the second half of May onwards was that with every passing day, the amount of loans that we were dispersing was getting higher and higher compared to what it was in the previous day. And that trend, fortunately, has remained as we speak today. So business is picking up, disbursements are picking up, but picking up from a fact that for the first 1.5 months, there was very little business that happened, number one. And number two, we are still not close enough or even reached.
All right, Mr. Mistry, we'll leave it there. Thanks so much for joining us this morning.